If you happen to be a brand new trader, statistics show that you have a 90% chance of failure unless you watch this video all the way through. In this video, I'm getting into why exactly traders fail and what step-by-step process you can do to ultimately mitigate that so you can continuously take home some profits. Please like, share, subscribe, turn on the post notifications to my videos. It really helps me out. Now that we got that out of the way, let's get this video started. So the 5 basic reasons as for why traders fail, starting with number 1, lack of knowledge. I mean, once you start anything, you're naturally not gonna know anything about it. What it requires is some sort of education, some sort of research. Essentially, you need to go out there and find who has the information that's required for you to be successful. There are online courses you can take to learn the basics of trading. There are books that you can read. My YouTube channel contains the basics that you need to understand what's required to be profitable in the charts. If you reach out to me, I can help you with the basics. I can do assessments, I can do consulting, and then we can just move on from there. Number 2, they want to make millions overnight. Guys, if you want to make millions overnight, trading is not the way if you're brand new to it. You know, you can only get to that point of making so much money in such little time after you got skin in the game, after you've lost so many times, after you've just gained all of the experience that's required for you to know how to do better. When new traders attempt to make so much in such little time, what they end up doing is over risking on each trade. So they would trade a high percentage of their account with the hopes that it's just gonna reach the moon and just never come down. And guys, I'm telling you right now, there is no one perfect trade that's just gonna make you millions. It just doesn't work like that. If you wanna be at the point where you're making constant profits, it is imperative that you follow a plan. Number 3, emotional attachment to the money. This is a big one, and it's almost as bad as over risking. The reason why is because what you end up doing is now you're afraid to enter the market. Now you're over analyzing, now you're overthinking. And what ends up happening, guys, and for you traders out there that this happened to, you're probably gonna be laughing in the background, right? So what typically happens is you would risk higher on the trades you truly believe is going to go your way, and those are the trades that lose. So once you take that loss, you lower your risk and you end up taking a trade that you're not so sure about, and that's the trade that wins. So it turns out to be like a constant cycle. Every time you risk low, your trade wins. Every time you risk higher or normal, your trade absolutely crushes you. So what that does is it causes a lot of frustration and you just don't know what to do. So numbers 2 and 3 practically go hand in hand. The ultimate answer to how you can avoid that, honestly, is experience. You have to start with no money or low money. You have to get used to pressing the button. You have to get used to the process. So that's why when it comes to Forex trading, you actually have access to paper money. You have access to trading in a live market with fake money. So essentially you have nothing to lose. There are platforms like tradingview.com. That link is in the description if you want to go make an account with TradingView, where you can backtest a strategy not having to take a trade at all. Now, I have a video on that on where you can learn the basics of TradingView. So if you want to learn about how to use TradingView, what TradingView is, how to leverage TradingView to mark up your charts, do technical analysis, check out my video I have right there, and you'll learn everything about TradingView that you need, especially for the basic level. Now we get to number 4. Number 4 was a big one for me personally. Now that is horrible risk to reward. This kind of plays hand in hand with number 2 and 3 as well, because great risk to reward minimizes everything. Great risk to reward minimizes most of your problems. That's why this is one of the most important issues that new traders have. And once you fix that problem, you'll start to be on the right track almost instantaneously. So what does horrible risk to reward mean? Let's say if you're risking $10, you're probably settling for $9 or you're settling for $8. Essentially what it means is the risk that you're putting up does not equate or does not match or doesn't make sense compared to the reward that you're trying to gain. So if you're risking $10 to make $5, I mean, that doesn't make sense. Why would you risk $10 just to make 5. It just doesn't make sense. So if you're in a leverage trade and you're risking $10, typically, me personally, I want to risk $10 to make $30. So what that means is my risk reward is 1 to 3. You're risking 1 to make 3 times what that risk is. Now, once you start to really get good at this, you can risk 1 to make 10. You can risk $10 to make $100. Now that's when it really starts to make sense, and I'm going to tell you why. So let's use the example of 1 to 3. Now, if you're risking 1 to 3 on a series of 3 trades, if you lose the first 2 trades but win the 3rd trade, you'll still be in profits by the end of the 3 trades. Just imagine this. Your account has 1,000 US dollars. Each trade that you take is worth $50. So you're risking $50 to make $150. If you lose your first trade, your account size is now at 950. Let's say you lose your second trade, your account size is now at $900. But you win your 3rd trade, now you earn $150 because you won that 3rd trade. Your account is now where? At $1,050. So you're $50 higher than your account balance. So after 3 trades, you're still $50 in profit. That's why risk to reward is so important, because you do not have to win every single trade. Now imagine you're a lot better at trading. You put some time in, you've got some experience, and now you're risking 1 to 5 risk to reward. So you're risking $50 to make $250. What that does is it gives you more room for failure. You can lose 3 trades, win only 2, and still be in profits. So guys, that's the amazing thing when it comes to risk to reward. Now, when it comes to binary, you cannot do it per trade. You will never earn a great risk to reward per trade. For example, with binary options, if you take 1 trade, the profit goes by percentage. So if the profit is 90% and you risk $10, you're only going to make 9. The risk to reward is less than 1. If that makes sense, it's less than 1 to 1. So when you think about it per trade, it's actually a bad idea. But when you think about it in a chain of trades over a specific amount of time, that's the best way to gauge it for binary options. I'll give you a binary options example. Let's say your goal is to risk 5% and gain 15% over the course of a week. What you're gonna do is, based on the trades that you take, it determines how much you're risking per trade. Now your goal is to make 15% over the course of the week, leveraging only the amounts that you are willing to risk. And as you keep track of that, that's the best way to do risk to reward when it comes to binary options. So number 5 is lack of a trading plan, right? So in order to be a successful trader, you need to put together everything I just went over in 1 through 4 and now create a plan for your trading journey. It all starts with what pair you are trading. The pair that you trade determines the time that you trade. So if you go on forexfactory.com, it supplies you with the time zones of the Forex market. So you have New York, you have London, you have Sydney, and you have Tokyo. So each of those Forex sessions determine which markets are open. So you only want to trade a pair at the time that both markets are currently open. That's where you'll get the best volatility, the best results of movement, guys. So the next section you want to add to your trading plan is how much percent do you want to risk per day or per trade or per week, depending on what you're doing, whether it's binary or leverage, versus how much you want to gain over that exact amount of time. The next step of your trading plan is, what is your trading strategy? So each trading strategy should have a step-by-step system of what you follow before you press that buy or sell button. Now I'll give you an example of what that looks like. Step 1 for me when I'm trading, before I get on the charts, is I check my mental. Like, how am I feeling at this moment? What is going through my mind? Why am I on the charts? Am I trading because I need money? Am I trading because I see a setup? Am I on the charts because I just want to be on the charts because I'm bored? You know, I check my mental state of mind before I even touch anything. Step 2 for me is I would go find out what's happening with the currency pair that I want to trade, to see if there's any news coming out for the day. Step 3 for me would be, to hop on the charts, get on one of the time frames and figure out what is the trend of the market, because you always want to trade in the direction of the trend depending on what type of trader you are, so on and so forth. So these are the things you want to follow every single time before you press that button. Now, what you need to understand out of that trading strategy is it doesn't mean that your trading strategy is 5 steps and you only follow 4 2 days of the week, or you only follow 3 4 days of the week. No. If that's the process you're doing with your trading strategy, you would never be profitable because you're not following the system. You have to make sure all steps of your trading strategy is true before you press the button. Now, with that alone, your trading profitability would go from 0 to hero just with that simple step that I just gave you guys. Now, once your trading strategy is set, your risk to reward for the day, week, or month is set, you're trading at the correct time for the pair that you're trading. Now, the last thing that you need right before you enter the trade, make sure you're following the correct risk to reward based on your plan. Now, once you put all of that together, guys, you have everything you need. Just to recap that, number 1, we have lack of knowledge. Number 2, traders want to just make millions overnight. Number 3, traders have that emotional attachment to their money, so they don't even want to press the button. They end up just taking the wrong trades. Number 4, either horrible or no risk reward management at all. And number 5, lack of a trading plan. Now, once you put together the solutions that I put for all of those problems, you'll start to see the benefits, and you'll start to be a disciplined trader, and you will start to bring home the profits that you desire, that you and your family desire. So with that said, guys, thank you for hopping on. I'll see you on the next one.